Greetings, everyone. Uh, I welcome you to this presentation on tax planning tips for SMEs based on the 2025 Nigerian Tax Act. Okay, my name is Madabu Chubin Emmanuel. You can call me Obi1 for short. So I'm making this presentation to Nigeria Film Entrepreneurs Conference, NFEC, on the 1st of November 2025. Okay, this presentation is useful to everyone, but basically, it's not, it's whether in Nigeria or outside the country, and for you to understand the latest developments in Nigerian tax system, and you should plan your activity, appropriately. You should plan your business affairs better going forward. Okay, I'll give you the outline of this presentation. The presentation, it's not, it won't be that long, but it's basically, uh, I will go basically to the point, the main points. Okay, and these are the, this is the outline. The outline about the presenter, myself, you need to know me, presenting this subject. Then I'll go into business structures and tax exposure. We have different kind of business structure, so I will explain them and the tax you should be looking at. Then the five major tax penalties, basically in the Nigerian Tax Administration Act, there are new tax, not actually altogether. There are some are new, but some have kind of increased in terms of what is expected. One key thing I must mention here is the new tax laws. They are four in all: the Nigerian Tax Act 2025, the Nigerian Tax Administration Act 2025, the Nigerian Revenue Service Establishments Act 2025, and the Joint Revenue Board of Nigeria Establishment Act 2025. The last one is the Joint Revenue Board of Nigeria Establishment Act 2025. Okay, so those are the new laws, four of them, acts that have been signed by the President of the Federal Republic of Nigeria, President Bola Ahmed Tinubu, okay, earlier mid this year. So you need to know that, the major one key thing you should know that if you follow these rules properly, there are a lot of tax incentives for SMEs. But if you, that's only if you comply. But if you are not compliant, the penalties are stringent. So that's why I included these five major tax penalty you should be watching out for. When you know this penalty, you do things to avoid them so that you won't be penalized. Then I ended up with five tax planning tips for SMEs. Five tax planning tips for SMEs. Those things you should do in order to, um, planning tips in order to optimize your business profits legally. Legally. So our tax planning tips are according to the tax law. Okay, so that's what we're looking at. About the presenter myself, Wonderful Chobin Emmanuel is my name once again, formerly called Obi1 by colleagues. I hold a first class degree in accounting from University of Lagos. I have a master's in finance with distinction from the same university. I'm an expert in business and financial matter. I'm experienced in taxation, financial accounting, management accounting, audit, treasury activities. I'm chartered accountant with a difference, and I look at how to explore revenue generation for businesses because I also train people on investing, yeah, and yeah, business investment, how to do stock investing and the like. So revenue generation, I look out for that. I also try to plug leakages within any system I find myself by looking at the processes, the internal control within the system, and close any gap identified. Okay, I started my career as a resident auditor with Zenith Bank, and I carried out different assignments when I was in Zenith Bank in different parts of Nigeria, Port Harcourt, Abuja, Abakaliki, different part of Nigeria. Yeah, in 2020, in 2012, I joined Nestle Nigerian PLC as an accounting specialist. I was instrumental to the integration of the various units in finance and control, and I was designated an accounting pillar in the division. And I championed the Nestle Continuous Excellence Program, which I had accolades on. So I derive joy in imparting knowledge to others, and I believe that is capacity building is what is sustainable. So as an entrepreneur, I believe that you should be knowledgeable so that you sustain a business as an entrepreneur and you employ more people, you create jobs, and the company, the economy will be better for it. So that's why I enjoy capacity building. I've trained numerous chartered accountants. I train people on ICANN SCA, and I am still actively interested. I mean, in training chartered accountants. Okay, so I'm skillful in the dynamics of the economy. I do a lot of research on the economy, and I'm currently the managing partner of Obiama and Co. OMC, a firm of chartered accountants and tax consultants. Okay. I've been actively involved in offering solutions at federal and state tax issue. Okay, so I do both federal and state taxes issue as well. So that's basically, you can always reach out to me. This is my number, 08062785537, and this is my email address. So that's just about myself. Then now I will give you basically, uh, as I said, it's just straight to the point. So when it comes to tax, a lot of business, a lot of SME, we try to lump tax together. Some will say, "Oh, I run an NGO. I'm not supposed to pay tax. Oh, based on the tax law, I'm a small business. I'm not supposed to pay tax because I'm a small business." So you need to understand when I say you won't pay tax, you need to understand the tax the government is talking about. You need to understand the tax the government. There are different types of taxes. The major ones, which I've listed here. Yeah, there are different types of taxes, and I've listed basically the key ones that you should know. So if you have a tax rebate, you should know, is it VAT rebate? Is it company's income tax? Is it development levy? Is it which of the tax rebates am I earning? So don't mix all the taxes together. Okay, so in this slide, you can see there are basically four type of structure you can use to run your business. There are basically four. There's individual business structure, business name, limited company, and incorporated trustees. Now, a- out of this structure, what the government want us to, the structure the business want us to follow, government want us to follow more, is the limited liability structure, and that's why this tax law, this new tax law, it has been structured so it has been structured to give incentives. It has been structured to give incentives to a lot of small businesses so that at the end of the day you will want to incorporate your business as a limited liability company, okay, which is good, so that government can make proper decision about the economy, going forward, because we have a whole long chunk of informal structure, informal economy You go to big markets, go to Lagos market, Eko, Idumota, go to Alaba, go to Onitsha market, go to different. A lot of transaction happen based on individual. They don't go through the company structure. So government is trying to encourage company structure. So now, as an individual, what are the taxes you should be watching out for if you are operating as an individual? Now, as an individual without a business name, you are just doing business in your personal bank account. Number one, you should have a TIN number. Get registered as a taxpayer with the relevant tax authority. The relevant tax authority you'll be dealing with will be the state internal revenue service, the tax authority of your state. If you are operating in Lagos State, it will be Lagos State Internal Revenue Service. If you are operating in Ogun State, it will be Ogun State Internal Revenue Service. No, Abuja, the Federal Capital Territory Internal Revenue Service. So, based on where you stay, where you reside, that is where you have to re-register with. And of course, there's a kind of integration going on with such that there will be one tax ID that will cover you both at the state level and different levels, federal, state, or different states. When you move from one state to another state, you don't have to register again in that new states. But that's ongoing project. So as an individual, these are the three taxes you should watch out for. Direct assessments, direct assessments, payee, pay as you earn, and capital gains tax. Now, this direct assessment is a tax on you as a person because you are an individual, you are not under employment. You run your business, you import, you export in your name. You go to the market, you buy goods, you sell in a different location. Now you sell educational material, you sell laptops, you sell gadgets, you go buy, you can import them in your name. At the end of the day, it's expected you assess yourself as an individual, look at your bank statement. What is coming into my bank statement? What am I spending? What is the excess do I have? Then based on that, you calculate your tax. You can get a tax consultant to do that calculation. But you need to know that there's a direct assessment on an individual. Every year, if you are earning taxable income, you assess yourself and you pay to the government. The government all over the world expect all individual or citizen should be responsible. So that is direct assessment. Then there is what we call pay as you earn. Now, if you're an individual, you are in a paid employment, you are an individual, you don't own a business, but you collect salary. It's usually assumed that that is your only source of income. So you are expected that the amount supposed to come to you should have been payee ought to have been deducted before they pay your salary. And if it's not deducted at the end of the year, you have to calculate your tax return, your payee, and remit yourself to the relevant state's internal revenue service. If you are underpaid employment and you are also working side hustle, then you will come under direct assessment because you have other source of income, your salary income, your business income, your investment income. Okay, you will come under direct assessment. So you need to watch out direct assessment, watch out for pay as you earn. That's what you should watch out for. Then last, as an individual, if you have property, or you are into shares, you are into shares, you buy and sell shares, you make profits, we call it capital gains tax. Now, so you pay capital gains tax, you know, if um, the total turnover sales of the shares is more than 150 million, you know, in a period, in a tax year. Okay, but if it's less than 150 million, okay, you won't pay capital gains tax. So capital gains tax uh it comes not quite often. Like if you own property, not residential property. You own a different property and you sell your property. It could be your car, you know, your car that you have in the house you sell. The gain you made on the sales of that car is subjected to capital gains tax. Okay, and you pay the capital gains tax based on the graduated tax rates because this is an individual. So when you are selling your property, you consider, ask yourself, you know, have you paid capital gains tax? And if it's a contract you're going to, you need to consider if it's something that will attract stamp duty. Is it a dutable contract? Okay, so that's one aspect again. But the common one is direct assessments. As a business owner, you come under direct assessment most of the time. Payee, if you are solely an employee, you go under payee. Then capital gains tax, if you have properties and you sell your property like car, property like your AC, property like your shares, property like your crypto, they are all assets. Capital gains tax that you just, once in a while you want to sell your investments, you make some gain. They are subjected to capital gains tax. So when you should know the kind of taxes government is giving you allowance on. Then the next one is you may want to now upgrade that. I want to have operate like a business name. Now a business name is just like your individual name, but it's registered with the Corporate Affairs Commission. So there's no much difference between business name and individual because the individual and the business name are seen as the same most in the eye of the law. So if you're a business name, that individual is still in that business. So if you have ABC catering services, okay, ABC catering or ABC foods, okay, or ABC motors. You sell any business you are doing, okay, you are a business name, registered business name. So your business name, you have workers. So what are the taxes you are supposed to what are the you should watch out for? You should watch out for all these seven taxes. Direct assessment because you are the owner of the business. You're a business owner. So you come under direct assessment. Payee because you have workers working for you. You are paying them salary monthly. It is expected that you deduct payee on a monthly basis and remit to the relevant state internal revenue service if what you are paying them as salary is above the minimum wage. Development levy development levy in Lagos State is 100 naira for each staff. That's one of the cheapest. Okay, so you pay that. We also have business premises permit. You also pay that 10,000 naira in the first year and 5,000 naira subsequent year. That one is also affordable. Then you have VAT. If your turnover is more than, based on the new tax law, is more than 50 million, then you should be charging your customer VAT. You charge them VAT, you collect the VAT, and you pay to the government. Withholding tax. If you are giving people contracts, you are giving them contracts to do some work for you. For instance, you own uh, let's say for instance you own a supermarket, then you all the acs in the supermarket are not, probably they are not working and they are big acs. So you call an ac servicing company, a very big ac company. As though your supermarket is very big, so they service your ac. Before you pay them, you need to deduct or withholding tax. Don't pay them the full amount of money. Don't pay them everything. You have to deduct withholding tax because any money you are giving people withhold, you have to wait. Just like before you give your salary to your workers, you are deducting payee. You deduct payee and you pay to the government. Any money you are giving out to someone, you have to, if that business is not a small business, you have to deduct withholding tax. Then you remit. And the range has been improved now. to 2% to 10%. Depends on the kind of transaction, currently. Capital gains tax, just like I explained for individual, when you are selling shares, you are selling property, you are exposed to uh, capital gains tax. You are exposed to capital gains. And that means that you have assets, uh, you have motor vehicle, you have generator, you have buildings, you have land, you have shares, you have digital assets, okay, you have gold, you have commodity. When you sell them, you are exposed to the gain you make on those sales. We call that capital gains tax. Okay, so basically, and you sell, you make gain. The capital gains tax comes as a particular percentage, and you will calculate the capital gain and you remit to the states. Now, both individual and business name uh, usually pay their taxes to the states, to the state internal revenue services. Okay, so please take note of that. Then we also now this is where the government wants us to operate more in as a limited liability company. So if you have the funds, you now upgrade the more to a limited liability company. Now when you upgrade to a limited liability company, yes, you are exposed to more tax, but you can plan your affairs, in such a way that you see the more you are going up from individual to business name to limited, you could see the number of taxes increases. But there's a way you could use your company properly, draft your company policy in such a way that the amount you would pay as tax might be better off than a business name. Okay, so that's why the government has given a lot of incentives to uh, limited liability company. So under limited liability company, you will pay direct assessment because you are still part of the director or owner, a shareholder of the company. You have workers in the company, you still pay your payee. Development levy to state, you will pay that, and business premises permit, you pay to state. Value added tax, if your turnover is more than 50 million, 50 million and above, you charge VAT and remit. Withholding tax, now if you are making any payment to your vendor or your contractor, deduct withholding tax and remit. Capital gains tax, I've explained this. If you are selling your property or assets, you will determine the gain and the tax charged on it. The capital gain tax here has been increased. It was 10% before for company, but has increased to 30%. So if your company is your company, not your own personal asset, so your company asset, you are selling your company asset in the name of the company, then the tax is 30%. It has gone up. This is an area that people are talking about because this is additional revenue to the government, because it was 10% before, so but they've increased to 30%. People will not really talk much about it because it's one off. It's not everyday transaction, and it's for big companies. Companies that have assets, making millions in assets, that sell millions of assets. Okay, okay. So the new tax law is structured in such a way that it benefits more individual and medium size individual and company. But the multinationals, the big guys are looking at what can they do, to manage this new situation. However, it's a two-way thing. I just pray it keep attracting the business. There's also room for the big guys, economic incentive that the government is giving the multinational that they can. There are some priority sectors that are their business is into billions, and they can get some incentives from government, and they will they won't pay much taxes because the big guys, the high net worth individual, the influencers, the celebrities, the multinationals, the big companies operating in Nigeria, they are worried right now. What can they do? what they are putting, they have to put on their thinking cap. Okay. Now, for small businesses, the challenge small businesses will have, if you are not following the law, you are not, you are not filing, you are not communicating when it's time for you to communicate to the government. Okay, so let them know that you're a small business. Even though you're a small business, you have to communicate with them, carry them along, carry governments along, carry the tax authorities along, structure your business properly. Let them know I'm still small. This is me. Oh. Be open, be sincere, be transparent. That's what government wants. Okay, so capital gains tax is still there. It's now 30% because it's for company. Company's income tax, you will pay that one because you're a limited liability company. Because a company is a separate legal entity, different, distinct from its owners. Okay, a company is a separate legal entity, distinct from its owners. So the company will pay its own tax. There's another called development levy, is at 4% now, that all companies will pay again. Okay, so this the company income tax 30%, big company, and development level 4%. So you could see that the tax law is very favorable to small companies, but not favorable to big companies. Okay, so these are the taxes. So if there's anything that benefits you, if the government is not is giving you a lot of incentive, that means that you don't have to charge VAT, withholding tax, you don't have to deduct withholding tax. When it comes to company income tax, is zero for small companies, development level is zero. But don't forget that you are an individual, you are still running the company, you have staff. Don't forget your payee, pay as you earn, development levy, business permit permit, and direct assessment. That one is going to state, not federal government. Don't forget that. So that's one key thing you must be aware of. Don't say government has helped small business no, that you're not paying any tax. Don't muddle things up. That's the essence of this slide. Then we have the incorporated trustees. Now unincorporated trustees, these are the tax you pay. Like these are where the association, NGO, like churches, mosque, this is where they fall into incorporated trustee. You pay direct assessments because you're an individual. As a trustee, you are an individual earning income. You know, whether you may have other source of income apart from being a trustee. So you as an individual, your direct assessment is sacrosanct at the end of the year. Do it. Pay as you earn. If the incorporated trustee has staff, NGO that have staff, there are some big NGO, educational NGO, health NGO, they have staffs. They are paying them salary. Payee must be deducted. Development levy, as I told you, for each staff, 100 naira. That also must be paid. Business permits must be paid to Lagos State. So when it comes to VAT and withholding tax, now depending on the transactions that the NGO, if it's into educational NGO, it's not vatable. So this one is the VAT is not actually compulsory. It depends on the nature of the transaction that the NGO is into. Okay, because there's nothing like threshold here when it comes to incorporated trustee. But looking at the nature of the transaction, most NGO deals with humanitarian services, educational services, religious services, most incorporated trustees. So most of the time VAT does not play. Now withholding tax, if they are dealing with big companies as their vendor and contractor, they might be required to deduct withholding tax. But if they are dealing with small companies, if they are dealing with small companies, they may not have to deduct withholding tax. Capital gains tax, if they have property and they are selling it, and there's gain in that asset, which is significant, okay, they are exposed to capital gains tax, okay, except if the proceeds will be invested back into the that same assets. Okay, then they may not have to pay the capital gains tax. Okay, maybe you sold shares and you are investing the proceeds back to buying shares again in Nigeria. Okay, so you may not be exposed to capital gains tax. Okay, so basically, uh, you need to understand this slide, understand this structure, so that you know what and what is upcoming. Okay. As I said, the good thing is the the new tax law is so beneficial to small company that has turnover less than 50 million. In that case, you won't pay company's income tax, you won't pay VAT, you won't charge VAT, withholding tax out of it. For capital gains tax, if your turnover for those assets is less than 150 million, no capital gains tax. Okay? And you also have additional gain of 10 million, even though your turnover is more than 150 million. The first 10 million is not taxable. So, but anything above gain of 10 million, then you pay tax. So, it has been structured in such a way that the target of government is the way it is now. The tax is progressive in nature. You know, you earn, you pay your tax. You are not earning much. Relax, work hard. Don't say you're not earning much, you want to relax, you don't want to work hard. No, try to earn high. The government is giving incentive that they don't want to pressurize. They don't want to tax poverty. No, they don't want to tax people that are struggling. They want to encourage them to work hard and move to high net worth individual, high income earner. Okay, so when you get to that bracket, be ready to pay. So if you are a female entrepreneur, you are a female business owner, your turnover is more than 50 million. Therefore means a big company in the eyes of the law. It therefore means a big company in the eye of the law. If the law require see you as small if your turnover is less than 50 million naira next year. But if you are more than so if you are listening and you are more than 50 million, put all the structures in place to ensure that you are doing everything monthly. um Because at the end of the day, if they are going they might want to go very full force and like you have your records to show that you are paying your VAT, you are charging your VAT, everything is there, everything is there, and you keep moving smoothly. Okay, but if you are less than 50 million, you are 20 million to 5 million, yeah, the law encourages you encourages you. Okay, so these are the business structure. So my next slide, I will pointing to you 5 major new tax penalty. Okay, 5 major new tax. I put them new because you know some of them are not fully new like that, but the figures, most of the figures are new. They are new in terms of how much penalty is expected. The new tax law is designed to be punitive to people that don't want to listen, that don't want to pay their tax. That's how it's designed. It's designed to encourage small business owners, okay? To encourage small business to move big. And for big guys or anybody that don't want to pay their normal tax, it's the punishment is more than we used to see. If you fail to register 50,000 naira in the first month and 25,000 for each subsequent months based on section 100 subsection 1 on the Nigerian Tax Administration Act 2025. So you see that if you fail to register for the first month, you fail to register your business, you don't have a TIN number, you pay 50,000 naira. So each month you fail to register 25,000 naira subsequently. Award of contract to unregistered person. If you award contract to unregistered person, you are going to pay 5 million naira. Someone that don't have that is not registered with tax for with government, you pay 5 million naira. Failure to file your returns, maybe your VAT returns, any of your returns, your CIT returns, there are a lot of returns. Returns are all these tax you see in this previous slide I showed you. You must file returns, direct assessment returns, payee returns, capital gains tax returns, you know, any tax you are paying, you must file return. Return is a way of telling the government that I have assessed myself, my income, my expenses, and what I have left, and I've paid my tax. I have the receipts. Take, come and take. You committed to them that you've done your self-assessment. If you fail to do that, 100,000 naira in the first month, 50,000 naira subsequently. So if you have 6 months, like that, the first month of delay, 100,000. The next month, 50,000 like that, 50,000. The next 5 months, that's 50 plus 100. Minimum, take 50,000. Just for the fact that you did not file return. But some people will fail to file return for 4 years. It will keep accumulating, keep accumulating. Failure to keep accounts is not required mandatory by law to keep accounts. Now, if you fail to keep accounts, because that account is meant for you to be able to file your return properly, know what should be paid as tax to the government. So it's not a penalty if you fail to keep accounts. You will pay 50,000 naira if you're a company and 10,000 naira if you're an individual. So as an individual, you are required to keep accounts. Okay? As an individual, you are required to keep accounts. Take note. As a company, it's very important. Keep accounts, records, document. So it's a law now. It's not optional. Failure to give access to deploy technology. The government, the government is declaring. The government is currently uh, trying to. They are trying to deploy technology when it comes to VAT and withholding tax. Okay, so they are trying to deploy technology when it comes to VAT and withholding tax. So you need to take notes. If you fail to deploy technology, you are going to pay 1 million. Failure to give access to deploy. If you don't want the government to give you the fiscalization system where you be passing your invoice through, you don't give access to them. They want to know, government want to know exactly how everybody is doing in terms of your transaction. They want to know what's going on. If you fail through technology, if you fail to give them access, all business eventually, but they are starting with the big bill, big businesses. 1 million naira for the first day and 10,000 naira for each subsequent day. See, very serious, very very serious. So having known those penalty, you know, which are stiff, I'll quickly give you the tax planning tips. I give you failure to register, award of contract on original person, 5 million naira, failure to file return, failure to keep account, failure to give access to deployed technology. These are major ones. Very simple. Tax planning is very, very direct nowadays. Number one, keep accurate records, your source documents, your invoice, your receipts, everything, your records, your Excel, QuickBooks, Zoho books. Keep all your records properly. This is the best tax planning tip you can ever get. Okay, if you are careless, you're not keeping records, well, it's not good. There's serious consequence. Formalize your business via incorporation. We encourage you to incorporate your business as a limited liability company because there are more incentives as a limited liability company in the new tax law than the formal law and than the business name. Get a limited liability status. Engage in VAT-friendly businesses. There are some businesses that are non-VATable, like agricultural business, medical business, pharmaceutical business. They are non-VATable. Now, we also have do monthly VAT filing, monthly withholding tax filing, and remit your VAT and withholding tax. Do it monthly because the penalty of not doing your filing is 100,000 naira for the first month and 50,000 naira for subsequent month. Okay, now so that's it. If you are doing that, get an accountant. Don't be penny wise. At least you are giving an accountant, you are giving your accountant 40,000 naira monthly just for filing. You are saving 10,000 naira on that month. Let's say I'm not looking at the first month of 100,000, 50,000 naira. Even if you're paying it for someone just for filing, no, I'm not saying that because of an accountant. I mean, someone, he just say, just be filing my VAT for me, just my VAT only. I don't say accountant salary is that small. No, just for my VAT. I don't want to enter penalty for VAT. Very at least, yeah, it's a good deal for you as a business owner. Of course, tax is more than VAT alone. Ensure your vendors are tax registered. Don't just give contract to someone that does not have TIN number or is not tax registered. You are doing yourself a disservice. Okay, you may have to pay 5 million naira, very huge for that. So they don't want you, they want everybody to be registered. Okay, so those are the key tips I would like to share with you. I hope you enjoy the short presentation, and apply it to your business. Start now. Don't wait till next year. Start the habit of record keeping. Record keeping. Rearrange your affairs, your department, your account department. Get a new shell, get new file, have a accounting and record keeping discussion, internal control discussion with all your staffs. Okay, that's the best tax planning tip. Thank you for listening and thank you for your attention. These are our phone numbers, this is our website. You can reach us at any time. Thank you and bye for now.